Hi guys, it's CryptoBirb Adrian speaking. Welcome to today's Friday webinar. Um, lots been going on this week. Friday is a great day to actually wrap up, what's been going on always throughout the entire week on the equity markets, which definitely, kind of like lay the path for what's happening also to cryptos. And we're going to give it all a deeper check, deeper chart screening. Okay, so if you guys are actually curious to learn what's next for Bitcoin, Ethereum, Litecoin, and also with their little bit of stocks and other markets, well, make sure you stay tuned. We are going there right in a moment. Hope everybody is doing okay. Let me know very quick if you can hear me fine, if you can see me just fine. As always, I want to make sure that there are no technical disruptions, difficulties. Please let me know how you are feeling today. I can see Alex Shiva sending love from US. I can see Matej Angelo, Andrei Heya, two live streams in one day. It's pretty wild. Janek Dzikański, Heika, Sultan Photo, clear, beautiful. Yeah, it's definitely very interesting moment in the markets. The stocks are actually trying to breach for the major resistances after heavy decline. Some stocks like Meta, some just Meta, Netflix, they are still down significant portion of what they had earned for the past years as well. So we are going to give it all a definite check in a brief couple of moments. But before we do, please let me know again where you're writing from. I want to uh yeah, I want to see all the good vibes and all the love being sent from all around the world. Our community is so international. I love it so much. In Poland, actually, the weather is not really perfect this day. There's been starting off with a sunny weather. You would have a lot of rain, then rain would all of a sudden become a snow and a snowstorm. And right now it's kind of like somewhere in between, a lot of darkish grayish areas. Not really a good vibe for those who love a lot of sun. We have people from Canada. All the best love to you guys out there in Canada. uh we're all with you. Turkey, Bahrain, uh Poland from UK. That's good. Poznan, cześć, Jasha. Sweden, UK. Hi from UK. Good work on the Mantra show earlier. Richard, Brian, thank you so much. I wish my drawing tools and pencils, had been working well. Apparently they didn't. Australia, Ostrów Wielkopolski, cześć. Greetings from sunny Vancouver, beautiful USA. I love how international we have grown to be, everybody. This is huge success. And speaking of success, I also want to get you guys, just for the kickoff, a very, very beautiful, successful story and announcement. Because we have just welcomed very, very freshly, right, a couple of moments before the webinar started, we have covered and brought the new contributor, official contributor to the Burb Nest. And this is a huge success because, well, the application process is very thorough. It's very hard to actually get in the any official role, amongst the team, right? And our good friend BC Richfield has actually managed to go and successfully enter amongst the official contributors, right? And for the next months, we are going to definitely be looking at, well, at his works in the technical analysis department. So great job so far. This is his Twitter. I've actually pressed a follow to him. Make sure you actually follow him as well on Twitter. Very valuable person, amazing. For the insights he shares, very good charts. Congratulations, buddy. All the amazing works really paid off. Well done for you. And well, I wanna just say that well, this is, as much as we grow in general, as much as the growth, there's been for my own personal brands, for the Bourbon as the amazing international community that it's become. We need more talented people. So BC Richfield, having freshly joined, is not probably the last person to join the team, because we are expanding firstly the contributor section and then other departments eventually giving them all the chance to become the final official team members, which is quite an achievement. And I want to start basically the chart story by giving a bit of a market outlook for what's been going on, on the markets today as of now, right? So let's have a look at major markets, industrials. Well, industrials, you can tell that we've been tiny bit kind of like, struggling to bridge and successfully reclaim the areas uh, over the averages. We have seen significant portion of a breakout already through 200-day average. These are the daily charts, just some sort of like an overview. Right now it's resisting on the shorter term averages, just like moving average 40, 50. So we're looking at short term kind of like consolidative period after a strong massive upwards recovery. Composite index on the Nasdaq is similarly resisting after of course heavy decline that had lasted for 3 months. Now after heavy decline, we have already managed to see some decent recovery off of the lows, 1300s, low 1300s, all the way to highs to mid 1400s, 14,000, sorry, thousands of course, 13,000s and 14,000s points on the composite index scale. And here again, similar case, right? Strong recovery sideways. So we're moving in a sideways. This sideways picture is some form of right now consolidating towards an apex, right? It's contracting, conjuncting. So perhaps we're going to be looking at some form of some, ascending triangle. If there is supposed to be a follow through finally for the main resistances, it would make a lot of sense. Especially, that there is some more ease potentially maintained for the next days, weeks, at least until the first reported rate hikes are actually going to be implemented. God knows where it goes. In terms of they are really completing that. The federals, would be expected to have plans already during the last FOMC meeting in January, but they did not. Right, they didn't really spill the beans a tiniest bit. So end of the day, we don't know if they hike the rates at all until they actually do, right? So, and until they do it, these are just like some empty promises, just like most politicians do. S&P 500 SPX, of course, similar case, somewhat of a contracting consolidation, right? You can see some local lows, highs being somewhat conjuncting. It's not an upwards trend. Short-term bars are actually showing you a bit of a sideways, and this sideways is trapped between longer-term and medium-term average. The red one 200 and the blue one, which stands for 40 or 50 here. But regardless of that, because you can apply, some people you would find many people apply 40 because it's more sensitive. You would see many people apply 50 because it's more classical, right? So there's always this discussion of what works better, because at the end of the day, technical analysis serve a lot a self-fulfilling prophecy. And because many people look at the charts, they see similar things and expect similar patterns to unfold in a similar way. So like I said, you would see as many people using literally just MA40, MA50. Regardless of that, is just trapped in local sideways, to my mind, in case nothing just happens all over the tensions, Russia, Ukraine, and some other unpredictable news that may hit the market at any time 24/7. So unless something like that happens, I could actually expect some follow through to the upside, which would validate the breakout and potentially new highs coming. So let's see how it goes. If they actually just, if the Fed actually just hikes the rates, if they increase the interest rates, this typically, as the history learns, has usually been short-term bearish and followed by medium-term upwards spikes, right? So short-term bearish or sideways, followed by some upwards trajectory on the medium term. So the way I read it, if they actually boost the rates, if they actually increase the interest rates, it would be fair to expect, but not limited to it. It would be fair to expect somewhat of a short-term negative or sideways price action going on across equity markets, indices, and hence what comes with that, crypto, right? usually followed, as the history learns again, by medium-term ease and shots up, fired to the upwards direction. Let's have a look at discretionary similarly resisting, perhaps in a form of some kind of a wedge. This is definitely looking a tiny bit different than the equities on the tech side, just for instance. So here we're looking at some form of a rising wedge pattern, much more than a clean consolidation, if you will. So potentially this, as long as it keeps resisting here, the resistance of the averages, there is a chance it actually just rejects it and potentially continues lower. Energy sector, needless to say, is pumping, the time of our lives. It's crazy how much power and how much strength the commodities have shown it over the past months, 18, 20 months, if you will, as well, ever since bottoming out on the COVID crash, March 2020. Ever since then, the market has been rallying. Financials, somewhat even larger sideways, decent recovery already to the highs. Technologies, just like I said, it could be already seen under the Nasdaq index. Utilities, real estate, more importantly, real estate is usually somewhat negative in terms of the high increasing interest rates, right? Interest rates increase the borrowing costs and basically make the real estate sector more expensive in terms of mortgages, in terms of loans. So it usually is somewhat limiting to the growth or real estate in case they actually and factually boost the rates. Here, if we have a look, I think at some more important points here for the treasuries, for bonds. Well, the bonds prices actually are plunging heavily, right? What comes with it is the T-notes, T-note 10-year notes. The yields are actually shooting up, right? They are on fire. Just crossed freshly 2.0. I think this is quite a rarely seen event, right? You don't see, at least over the course of the past several months, 6, 7, 8 months, you wouldn't see the market be as high for the treasury yields as the result of the potential rate hikes. But again, let's see if they actually just delivered on what they promised. And finally, commodities. We're looking at here at gold. Now, even if we take gold instead of the ETF, if we take gold end of the day price futures, you would have quite a decent sharp upwards movement still on the gold market. Of course, larger sideways. You can tell it's sideways because it has no actual follow through, right? There's a new high made, but this new high doesn't work as a support. It actually fails to maintain this level and balance right on the line, and it fails, right? And this is how we define that this is not an upward trend, but an actual failure in sideways. And it's had several of similar attempts so far, and it overall continues moving in this, more or less chaotic, randomized, if you will, even on the lower time frames movements. You can even tell, just looking at the averages, how actually, aligned and conjuncted they've become. Right, longer term averages are in perfect alignment with the short and medium term averages, which is pretty interesting thing to see, right? Because it clearly tells you what's the fair price of gold as of now, which is somewhere around 1800s, 80, perhaps low to mid 1800s for gold spot price. Silver, my favorite chart. Similar cases, of course, similar story going on, in terms of how sideways it's moving, right? So there is nothing long term, I should say, the medium term, long term, kind of like defined, but ultra long term, like this macro view, is hugely bullish. And that is something that I had mentioned so many times already before that. I would do my best to actually keep it short on that. Cryptos, of course, decent. Like, this is just an overview, right? Before we head over to the details about cryptos, Bitcoin leading all the party. to the upside right now, consolidating right above some medium-term average, which is definitely positive sign, and beneath the longer-term average, which is 200-day mean at around $50,000. So this is somewhat of a positive sign that there is potentially more room to growth, as long as we don't really see anything that would disturb the markets from the outside, some external pandemics, wars, etc. As long as it's holding the somewhat of, well, freshly broken resistances which have turned into supports, I don't see a reason why Bitcoin would actually just not go and north, towards the reaches of $50,000. This would make a lot of sense. You would potentially take altcoins with it in the upwards direction. Here are some other charts on the composite Nasdaq index, just like I mentioned on the weekly chart here, as opposed to the daily chart. We are right now, after a decent recovery, we're resisting at 50-week average, right? 50-week average is actually something that failed to maintain the previous several weeks before the final breakdown happened, right? This was a clear failure to maintain the balance above the line, above the average, above its longer term average. 50 weeks is an almost entire year price action, right? This is why it's called long term. And right now, as of now, we are consolidating on an intraday basis right beneath this longer term this resistance. Polarity has flipped from the support, which failed, towards the resistance. Right now, it's resisting to see an upper follow through with a candle close above it. This could potentially validate further indices points, just going upwards. And potentially even getting towards new highs, but mind the interest rates coming. S&P 500, just on the daily chart, just like I mentioned also briefly, you want to hold this short-term average. This blue line actually is 20-day average, as opposed to 50-day average, which is yet to be tagged. Clear consolidative nature, just like I mentioned. It's a little bit conjuncting rather than just flat range, right? You can see this conjunction per the sequence of increasing high lows and tiny bit, although it's not just as clear, decreasing sequence of lows, of highs, right? So you have higher lows, lower highs. This actually is contracting consolidation, perhaps some form of a pennant, symmetrical triangle. Pennants usually happen in the strong upwards trend, so I wouldn't dare perhaps call it the pennant just for the sake of it per se, but some symmetrical triangle, which can eventually become a potential continuation pattern if the stars align well in terms of no fundamental FUD appears. Just like I mentioned before, Netflix is still down heavily, right? After seeing this massive gap down, with an amazing volume spike right beneath, which usually accompanies the key swings on the market. This how you could potentially have known that this was the bottoming process. You usually see a spike. Spike, by definition, is a bar, in terms of a volume or in terms of a price, that usually is at least 3 times as large as the bar before it, right? So if you see some small aggregated volume bars, and then there is one that shoots up like there is no tomorrow, then this is how you know that you can call it a spike. And this usually type of spikes, they like to come around several, more often than not, around significant bottoming processes. Here, take this one for instance. Take this one. Peaks, bottoms here. It's fair to expect, in my opinion, that eventually, because this is quite a huge gaps because of the underlying volatility and intrinsic volatility of an asset. Gaps like to get filled, right? Or as more Japanese technicians would call it, that the windows tend to get closed. And if that is the case, then we are looking at Netflix recovering to around 500, per share, 510 if you will, to be exact. Right now, after quite a sharp recovery, of course, and a heavy 50% decline, just like Bitcoin had off 700 highs, heavily on overvalued stocks. On the tech side, heavy decline, bloodbath, of course, market going south. Ever since the Evergrande news came in on the perfect day, that reversed, crypto basically as well. Right, so still chances after some local consolidation, there are still chances, in my opinion, to eventually see the gap getting filled. So bargain hunters, may call for the move, and in while waiting for the gap to get close, but will it eventually follow through to the upside and show enough strength and risk on potential? Well, this is something yet to be decided, because this can be something that is called DCB, dead cat bounce. DCB is a situation where you have a fundamental trigger or a shock when the market goes up heavily, which was the case here, of course, and then you see like quite a severe crash, right? Quite a severe crash, which actually, has been the case so far here too. And this crash typically happens with some gaps even there, right? So if you have such a gap, then this, of course, generates insane discount, right? It wipes out a couple of years of the price action gains. And this typically is short-term oversold condition, which generates the buying opportunity, even if it is for the short term, right? So this DCB, dead cat bounce, would mean that despite there has been a fundamental shift, the bargain hunters would try to, call the dip, would try to catch the knives, and eventually ride it at least towards the gap close, or with some tiny bit of consolidation on top. But eventually, this dead cat bounce, because there had been like some significant news, right? Well, this dead cat bounce may mean, and by definition means, that there is no follow through to the upside. That is actually severe rejection and a reversal, right? So for a safe reversal, I want to see equities, especially Netflix, just in terms of the chart that we're looking at, just break above 50, like low to mid 500s. This is what could potentially provide enough stability, and this could also be indicative of what Bitcoin is said and supposed to do, right? So I hope it makes a lot of sense so far. And if it is a dead cat bounce, right, then this would probably resist to break through the resistances and continue lower. That can also be the case in terms of, factual realization of the interest rate hikes if it comes true. Before we head over to crypto charts, Bitcoin, Litecoin, Ethereum, just like I mentioned, I want to, guys, give you a very quick run and check through, through my favorite chart of BCOM, which is the Bloomberg Commodity Index, BCOM futures continuous futures contract here, which is super strong. The commodities are super strong. Here, BCOMX, you would have, of course, many different commodity indices. You would have BCOM, Bloomberg Commodity Index. You would have GSCI, Goldman Sachs Commodity Index. You could have CRB, the Commodity Research Bureau Index, right? You would have as many as you wish. And each and every single index would tell you a tiny bit of different weight towards certain asset class in terms of commodities. You would have different evaluation and different weight, different importance, significance, and contribution to the overall index performance coming from several commodity types. So you would have the energy sector, right? You would have the industrial metals, you would have the precious metals, as in gold, silver, platinum, etc., or even platinum, not always, depending on how we actually just account it. Usually gold and silver, one way or another. You would have the food market as well, which has been, literally crashing it too. And you would have the livestock, as in cattle, and hogs, etc. And depending on to what asset class it is more skewed, then what happens within this very asset class, within this very sector, commodity sector, will kind of the overall index performance would be skewed towards this, which is more weighted, because more often than not, it is weighted rather than linear. Well, here, this way, the metals and energy, per the natural gas, per the US oil, crude oil, WTI, is what drives this vehicle upwards, right? Heavy recovery ever since breaching and this fake out, just beneath the 2020 March COVID crash conditions, right? You would see this COVID crash literally. Remember that perhaps May 2020, futures contract for May 2020 was actually just trading at -$40, -40, -$50, as far as I can recall. Well, futures were driving negative, right? This is how crazy it went back then. And very sharp recovery, which definitely is supported by rising growing inflation, and like high inflation when it slows down, which is currently a little bit of the case perhaps, which is also one of the reasons why commodities have been doing so well. Of course, on the way up, you could spot several like chart patterns, like some bull flags over here, or some expanding triangles, megaphone patterns, if you will, some local head and shoulders here, right, with a head on top, with a breakdown. But the chart continues. The chart continues higher. It's if you count all the averages, as in 50-day average, 200-day average, it's all looking pretty clear in terms of the alignment and in terms of the direction. The overall direction is upwards. So there does not seem to be much of slowing down from the commodities. Silver, of course, from the longer period of time, I think this is very important to mention, that relative strength of silver against the benchmark of S&P 500 large cap index actually had broken to the upside, which tells it that there is a high chance that the chart actually shows relative strength. Okay, so that silver shows more strength than S&P 500, of course, during the crash day when it came to the equities, the crash weeks, if you will. And but this trend change, this trajectory change, I think is essential, is significant, because it's a first instance of an actual follow through, or actual, sorry, I should say breakout. We are still waiting for a follow through to the upside. If this actually is maintained and you see follow through, then this is a proper reversal confirmation of something that had lasted for over 18-20 months. This is somewhat legit. Well, strength is coming and flowing into the silver market, and I like silver a lot, as you know, because after topping in 2011 at around $50 per ounce, dollar used to have different value back then. You would have silver move for the next 2 years, following 2 years until 2013, early 14, perhaps. In the bear market, and heavy declines, just like you would see on the crypto side. Eventually giving some cheap discounts on the COVID crash day at around at around $10 per ounce. This is pretty cheap, 11, 10, wild times, good opportunities. And we entered after the breakout out of 7-year long accumulation. We have broken out and managed already to trade sideways for the past, soon to be 2 years. So it's pretty wild how long it takes. But this is a large reaccumulation, the way I look at it. And moving on to more crypto-related sides, I just, guys, wanted to give you a proper understanding and proper outlook for what's been going on, basically on the other markets, on the legacy markets, because Bitcoin and other cryptos naturally have been very strongly correlated to what equities do. Long story short, right? Whatever equities do, whatever S&P 500 as an index did, Bitcoin has tended to follow over the course of the past 2-3 months, at least ever since the correction started. I appreciate the kind comments. Make sure, guys, you actually smash the like button, just like our friend Razvan says. Smash the like button, hit the subscribe button, smash the likes, hit your notification bells as well, because we tend to release a lot of content on our YouTube, if you're watching that on YouTube. And if you're not watching that on YouTube, make sure you actually post your questions as well, because at the end of the stream, I'll do my best to cover some of the questions. Back to the merit. Bitcoin, you would see me often post this correlation chart between this layover of Bitcoin against dollar, against gold, and you would see this correlation flip, right? You would see this correlation flip and change. Some people would think that the correlation is only when the markets tend to follow the same way. this means they are correlated. But this is an example of a positive correlation. When one market goes up, the other one goes up too. Whenever one market goes down, the other one follows to the downside. This is a type of a positive correlation, when the correlation is different than zero, is larger than zero, and and of course it's smaller than 1. It cannot get over 100%. It cannot be more correlated than 1-to-1. S&P 500 versus S&P 500 is 100% correlated. It covers itself fully. But here you can get some fractional correlation, understood, for example, statistically under the correlation coefficient, or just for instance from the linear regression or R-square. But more importantly, you would have also other type of other side of the correlation as a negative correlation, right? You can have no correlation whatsoever, where the correlation coefficients are 0. You can have positive correlation when they are not 0, different than 0, and larger than 0 on the positive side, but less than 1. And you can have negative correlation when it's a mirror kind of like thing. Whenever one goes down, the other one goes up. And you can see that Bitcoin had occurrences of this kind of negative correlation, right? So whenever there was a peak on Bitcoin, there's similar, period of bottoming on gold, right? Whenever Bitcoin was bottoming, the gold was peaking, more or less, right? Of course, this is never like 100% accurate immediately, right? Or like clearly. It is usually a larger portion of data needed to validate it. But here it's fair to say, there was somewhat of a similar peaking time on mid-November gold and and Bitcoin, right? So since then you would see Bitcoin seeing somewhat of a negative, positive correlation, which then reversed because ever since I think the new year started approximately, or mid-December, if you will, you would see Bitcoin going south and gold going north, right? So the correlation flips from positive to positive in the other direction to negative, right? And right now it's back to positive. Whenever Bitcoin goes up, gold goes up too, which is pretty interesting. This type of correlation changes usually come whenever there are some external factors, unpredictable factors, just like, for example, Russia-Ukraine tensions over the border. Some unpredictable stuff like Elon Musk tweeting, some federal rapid changes, like unexpected decisions, movements, catastrophes, natural catastrophes, volcanoes, eruptions, all of that can disbalance the market and reverse the correlation. And if you head back to what was happening in March COVID 2020 crash, virtually non-correlated markets were tanking as one, right? S&P 500 was tanking, gold was tanking, although it's supposed to be a safe haven at times. Bitcoin was tanking, like, you would see currencies tanking as well. So it was pretty wild time. And correlation changes, but it's somewhat, knowing that the correlation had been somewhat negative, right, and conjuncting. I was mentioning that I think on a stream 2 weeks ago or so, that that this peak on gold at that time, right, on the block chart, on the block curve, this peak on gold could be somewhat indicative of potential Bitcoin reversal. And well, it's been proven correct, which is good. And similarly, if you have some external news weighing in on what's happening on the markets, you can have as many bullish or as many bearish as many bullish types of news, right? Here's just an instance that from one hand, there's a tension on the oil side, of course, and on the Russia-Ukraine borders. Then Russia moves to recognize crypto as a form of currency. This is somewhat of a rumor, and imagine if it actually comes true. You would see, you knew that Turkish officials were actually meeting, I think, the president of El Salvador recently, right? Discussing also cryptos to the best of the public knowledge. Russia, talking about more and more openly about accepting crypto. So you imagine that these types of news, the day that the news comes out, that Russia accepts cryptocurrencies officially, or Turkey accepts crypto as a legal tender or stuff like that, this could potentially be a price shock to the upside and something that showed up Bitcoin price similarly to what Elon Musk accepting crypto for Teslas did last year. So, giving it for the next 10-15 minutes, giving it a bit deeper check on the Bitcoin, on the Ethereum, on Litecoin, cover some of the questions as well. I want to just say and kind of kindly remind that if you're watching that on YouTube, make sure you actually hit a subscribe button, smash the likes, leave some kind comments and questions in the chats. I'll do my best to answer some of the questions, guys. Giving it a check on a weekly time frame for Bitcoin. All right, what I think is important to mention is that, well, ever since the bull market started, right, what was happening in the bear market is not really relevant because this was different market cycle. It's not valid anymore. If you have a look at this bull market, right, ever since bottoming in December 2018, you would have, well, the Barbicator indicator on the bottom, the Barbicator oscillator, which is available and free for everybody to use. You can get it on TradingView by typing the Barbicator, Barbicator, Barbicator. Type it in. Feel free to use along. Enjoy. Most importantly, it shows you the trend conditions and the market momentum. And very recently, despite the market still being, actually below the 50-week average, which is the black curve, and after seeing somewhat of a 37% upwards recovery, a sharp one, strong one, which is good, this indicator still remains in the extremely oversold conditions and extremely oversold area, which tells you that per the values of the bottoming at around $35,000, you would see this market getting oversold this much only 3 or 2 times before in history of this bull market. And you would see, like, just for the context, this indicator to bottom this much when Bitcoin was trading either at $3,000-$4,000 region or at $6,000-$7,000 region, right? Here, Bitcoin was, of course, having some decent breakout to the upside over the longer term average. Then it was followed by the unexpected COVID crash to the downside, which took down, of course, all the markets with it. So if you actually just have a line chart, this thing is not there in the line chart more often than not. On the futures, I don't think you see this dip down there. Anyway, but most likely, what I want to mention to you guys is that the main takeaway is that Bitcoin is currently, per the metric, per the orange crossover in the bottom, is showing you a freshly new bullish trajectory potentially getting started, while the conditions on the market are as oversold and as cheap technically, not number-wise, but technically, but this can have such implications, as oversold as it was when it was trading at $3,000 to $7,000. So it is quite large, right? And having the retest, off the $33,000 lows, 37% to the upside so far towards like mid 4,500s. I see the 50-week average acting as a local resistance at around $51,000. This is the level that I can potentially see that resists, that doesn't let Bitcoin price action short-term temporarily go through. But in case you actually see it go through and there is a follow-through, there is a close above it, then this might be a strong close above it. If this is a strong close above it, then there might be a significant reason for the market to show enough strength and momentum from the technical side to push through towards the range highs. And then if this happens, then third time is a chart, and this could potentially finally, with fundamental reasons like countries getting interested in accepting cryptos, in tandem kind of like cause a rally towards these new highs. Because if you remember, all my plans webinars about Bitcoin reaching $100,000, Ethereum reaching $10,000, $20,000, Litecoin reaching $1,000 or so, these plans have never been canceled in my mind, right? Of course, they were proven wrong about the time I had definitely expected the peak of the market to arrive until December 2021. It didn't happen. Instead, we got Russian military tensions, right? And the deflationary monetary policy per se. Uh, so yeah, I mean, timing is the biggest weakness of the any chartist of any technical analyst. It's hard. It's hard to tell you a price a day ahead. Investment banks invest actually millions and millions of dollars in artificial intelligence, some ARIMA like auto regressive linear averages, like softwares that tell you the price on a day ahead, because there are so many variables, there are so many uh, changes uncorrelated on a single day that it's hard to tell you the price expectations on the day, on the next minute, on the next 5 hours, on the next day, needless to say in the next 5 hours or a month, because everything can happen, right? The butterfly effect. But small butterfly flaps its wings, somewhere, um, I don't know, in Philippines, and this causes some severe consequences somewhere on the other side of a planet. Just for instance, right? Philippines is a beautiful place, by the way. Uh, so yeah, I just want to. By the way, I hope you can guys hear me well still. Please, yeah, okay. The chat is going on. That's good to see your activity. I assume you can hear me well still and good. So let's see. Let's see about the feather thoughts, right? For the long-term confirmation, knowing that the bull market has not been canceled, it's not a bear market because the market is trading sideways. The market is not even trading sideways per se. It's low momentum upwards trend, much more than anything, right? The upwards trend is defined as a sequence of higher highs and higher lows, right? Higher highs, higher lows. This is upwards trend. If it shows more gap between the previous high and the low, as in some extended price action with the extended third wave, just like Elliott wave practitioners would tell you, then this shows quite a regular healthy trend to the upside, which somewhat was the case. All right, first wave, second wave, the third wave, right? There's quite a distance between here, and we definitely would not love to see any breakdown in there. But if in case asteroid or some other unpredicted stuff happens to Earth, like all volcanoes erupt at one time, then I don't think Bitcoin would be held this high, and would likely dip, right? So assuming that charts tell you a different story, complete story, all the discounted price events, we can definitely notice and acknowledge that Bitcoin is not moving in a downwards trend defined as a sequence of lower highs and lower lows. Instead, let's face the truth. High $65,000, low 28,000, so almost 29,000. High 69,000 so far, low, which is somewhat recently nicely confirmed, at 33,000. So we have a high, we have a high, we have a low, we have a higher high, and we have a high low, right? So what the fuck? This is not a downward trend. This is not a bear market. Like, that's not how you define a bear market. A different story, different point is that this range has got monstrous in size. This range is twice as large with $40,000 base of 28 or approximately 30,000, just to use the calculations, towards 70,000 lows to highs. This is $40,000 size. This is twice as large as the entire Bitcoin's history up until 2017 peak. Right? This is crazy. But if anything, this would be closest to sideways in terms of the momentum. But by price action, it keeps making new highs and new lows, which are higher than the prior ones. So it is a clear definition of an upwards trend, which is the reason why I had never given up on my thoughts and on my thesis about Bitcoin targeting $100,000, Ethereum 1020, Litecoin 1,000, because it's all kind of like still there on the table. It just got interrupted by this correction caused by, funnily enough, on the very same day, not even on the same day, on the very same hour, on the very same minute that the Evergrande news struck the market. that literally crashed the equities too. So coincidental case, you may think. Yeah, so long story short, I want to see some follow through to the upside, a strong close and reclaim of a weekly session over 50-week average, in my opinion, could be indicative of further continuation and follow through actually towards the highs. One strong candle closed through the 50-week average could actually lead you places, in my opinion, and result in retesting the highs and potentially the new highs. A failed close, okay, failed close, as in you see a breach but it closes strongly and severely beneath, this could potentially be indicative of retesting those lows of $30,000 still. Regardless of whether that happens or not, excuse it, we are hovering right now at $43,000, and we are far more closely located to the 50-week average, which I think works as some sort of like a magnet. And accounting how oversold we are, I would personally vote for more of the upside resolution in here. I hope it makes sense, right? On the lower periods of time, let's give it a 12-hour time check. I think it's important that, well, to understand that these momentum bats, which show you, which are based on standard deviations that tell you volatility, average volatility, are showing currently some more upside room for growth towards $48,000 locally. Of course, we're looking at this local overthrow, also accompanied by the CPI reading. So usually see those different types and peaks and bottoms on the markets coming with some fundamental things, right? CPI reading, just local peak, made the market range instead of follow through to the upside. But more importantly, right? Well, this gives you a fair range of Bitcoin in terms of the price action to expect. It gives you the extreme high, extreme supply, and extreme demand based on the volatility alone, right? So you can tell that Bitcoin is on the medium term, my favorite time frame, 12-hour chart, is set to oscillate either extremely as low as 37,800s or as high as 48,000, sorry. 37, 38,000, 48,000 is the peak per the volatility so far. We are at 43, right? More importantly, even more importantly, if you get rid of the baseline bands per the Barbicator Pro, which is, by the way, the complete trading system that I use automatically here, showing several very important indications, completely fairly. This is called a CTF trailer, and it adjusts and adapts towards the new pivots and changes and follow throughs in the market, and hence shows you key supports and resistance levels to break to invalidate certain prior lasting trend. So hence the bearish trend, it's not even the bear trend or the downwards trend always per se, right? Because you can have sideways and you can have it flash bear. The way you read it is whenever it waves the bear indication, the bear label, it shows you that the bears have the upper hand. Bears have a lot to say, and they had a lot to say until the recent breakout through $40,000, which actually initiated a new upward trend right now with a stop and validation level at 40496. So in my opinion, the way I read it, as long as we trade and keep closing mid-daily sessions above 40496, we are safe. The bulls are safe and heading towards the most important pivotal level resistance, clear line in the sand at $51,000, which aligns directly and perfectly with 50-week average. It would make a lot of sense to see this level revisited sooner than later. If we fail to keep closing candles over the local lows, right, at what it is, $43,000, you lose 43, and it boosts the chances he visits 40, 41. In case that happens, you need to hold and defend 40496 as long as its defended upwards trend is oriented towards retesting 51,000. This is my opinion. And a quick look at the short-term period. Even if we even if we get rid of other indications, you can see that bears currently have somewhat of an upper hand. And even if you display the level lines and get rid of the supply block, the blunt demand and supply block visualizations for the pivots, you would see that, well, the bears have had the upper hand as of now after failing to close through $45,000, right? So the CPI readings on the peak have somewhat reversed the market so far. And as long as that is the case and we don't reclaim this stop level from the upside or 44830, there's a chance we actually revisit the lower level line support at 41376. Okay, so for bulls, it is definitely best to actually see definite strong close over 44830. In the case that happens, chances to go and revisit the next resistance at 45769. And in case that happens, there is a further $50,000 unlock, right, to be retested. Otherwise, fail or reject this 44830, and there are chances, and we're talking about $41,000 retest or even lower time frame, like even lower levels at $40,000. So this is it, this is it for Bitcoin. Very quick look at Ethereum before I wrap the show after taking a few questions. So make sure you actually hit a subscribe, smash the likes, and leave comments and questions if you have any for me to answer them in a couple of minutes for you. Here, Ethereum is still, for similar reasons, still in the upper hand from the bears on the major time frame, but if we have it more importantly, because longer period of course lags a lot. Short and medium term price action is actually showing you the similar reversal that Bitcoin has showed. Okay, similar reasons. Current after trailer got broken. New support, in case you don't see it, it's actually at 2550 is the invalidation of ETH going upwards. Right now on the medium time frame, as a 12-hour chart, my favorite, the actual resistance is at support is at 2875. Right, I'm highlighting it because I can realize it's not seen well. You can actually just adjust it, but I don't want to waste time on that right now. So there is a chance for similar for Ethereum, and if it's caused by Bitcoin going south towards like 4041, you would see Ethereum most likely tanking towards 2800s. And if that happens, then it needs to hold above and close above this current time trailer on the 12-hour to support 2875. In case that happens, we are aiming higher and for higher recovery, and I can see us going as high as mid 3000s. And of course, this is just a short term, right? Ethereum BTC price, is of course a case of a broken, of a faked out breakout, right? The perfect reversal peak of the Evergrande news, actually, heavy decline, making the Ethereum BTC super bullish looking chart just go back and hide back inside the freshly broken out pattern of symmetrical triangles. So this pattern is broken. The boundaries don't make sense anymore, of course, because of what the market has received from the outside. Right now, of course, heavy decline, still short term looking pretty nicely. And I had explained so many reasons, so many times why I see Ethereum, reaching $10,000, Litecoin reaching $1,000, etc. So it would be just dumb, I think, for me to repeat it like a broken record all over again. If you will, there is this entire set of our recordings of our webinars where I actually dedicated entire sessions to explain that, based on a superposition effect, based on the price projections, and other techniques. You go for it. You can actually just feel free to check it out along. But yeah, it's moving sideways. Broken support is actually keeping back in the range. It's trading back inside this local sideways, midway through the upper points, right? So I can easily see Ethereum going higher later this year. And similarly for Litecoin, right? Before I wrap the show, I want to give you guys, like, of course, Litecoin is very much very much undervalued. There is a faked bottom breakdown uh, at around $100, $100. Litecoin is having a lot fundamentally, um, going on, very busy and boiling behind the scenes on the on-chain side, and the price is not reflecting that. Litecoin is like silver; it takes time. You need to give it a patience. You need to give it several years, at times longer waiting, but then it shoots up very well and like with full of gratitude and uh, full of success. So yeah, I still have not given up all my thoughts about Litecoin being definitely depreciated, undervalued, both on the Ethereum both on the Ethereum side and Litecoin side. We see quite a heavy space for growth, in my opinion. And I want to just take very quick questions from you guys. Do you still accumulate any crypto or out of the market? I think this is actually a good time to accumulate. I had recently bought some Bitcoin and Ethereum. Um, yes, but I'm definitely building, my portfolio outside crypto, in the precious metals, in the real estate as well. Should we stay on the sidelines until the trend is disclosed? Depending on what time frame, right? If you're a short-term time frame trader, then it may be indeed good idea to wait for some short-term resolution, for some short-term upwards trend or downwards trend unfolding. In my opinion, sideways is the hardest of them all to trade because it's lacking consequence and trajectory per se. Where did the crazy top y'all was predicting go? It's all guesswork. Just buy and hold. Yeah. So charts don't tell you story which is not seen in the chart, right? You cannot, just like I said, you cannot predict when Elon Musk tweets on from his golden throne. You cannot predict when he's feeling like going to take a dump in the toilet, right? So charts don't tell you complete story, in my opinion. Please let me know, guys, if you can still hear me. Now there has been, I think, uh, some important points to make about uh, recommendations for traders. Then Mud Buyer, very quick one before we wrap up the show. Yes, I highly suggest, guys, you actually educate yourself before making investment decisions. Right? End of the day, it's only you and you only responsible for your trades and for your money, not Jim Cramer on TV, not me, not your grandmother, not your parents, not anybody you randomly met on Twitter or in the street. It's you. You take a win, you're lucky to have it. Be great or be grateful for it. It's your win. When you lose, it's your loss as well, right? Otherwise, this is called the self attribution bias, where you only attribute to yourself only the wins, and you always need to find somebody else to blame for your losses. So, fight. My recommendation for traders, in terms of the tokens, is well, do your research. Do your own research. It's always going to eventually pay off better than you know than checking on what I have to say. In my opinion, Ethereum, Litecoin are great. Right, I have a lot of DeFi exposure. I have linear finance. I have UXRD, FRM, but I cannot give you a promise you that they are going to pump. And speaking of educating and closing the show, everybody, we have well, currently going on the free trials. If you guys want to educate yourself, but you don't have resources or don't have too much resources, or have too limited resources to spend thousands and thousands of dollars, you have actually you have the option to come to the Bourbon Store community for 7 days free. Right? If you don't like it, you don't need to stay for longer. If you like it, you can extend and become a premium member. And the only thing you need to get is the email address and the first name. And that's all. We're going to automatically DM you with the details. You're going to get all the details in your mailbox, and you're going to become the free trial member for 7 days free. So if you guys are ready to join in, if you're not here to joke around and goof around and be, and be pretend, you're here for improving, for trading. If you are taking this game seriously, come over, educate yourself for 7 days free and see where it gives you. Theburbness.com/free trial, theburbness.com/free trial, or go to theburbness.com, just like it shows here, and go for the sign up free button. And guys, I think that's all for now. I hope you appreciate the time spent. I hope you appreciate this session. God bless you all, and I see you guys on the next shows. Stay tuned. We have a lot more coming. Cheers. God bless.